Dear students, in the last lecture of management accounting, we discussed in detail about one of the revenue statement ratio, which is known as expenses ratios. Under the head of expenses ratios, we discuss in detail about 5 group expenses ratios, which are known as cost of goods sold to net sales, total operating expenses to net sales, office expenses to net sales, selling and distribution expenses to net sales, and finance expenses to net sales. In case of individual expenses, there are a number of individual expenses as per the items covered in the revenue statements. Now, there is one of the important revenue statement ratios, which are known as net profit ratio. Net profit ratios can be again determined 3 ways. Therefore, there are 3 profit ratios, may be known as net operating profit to net sales ratio. This ratio indicates the relationship between net operating profit to net sales. The purpose of this ratio is to measure the operating efficiency of the organization. Whether sufficient operating profit is earned by organization or not, this can be indicated with the help of this ratio. For determination of net profit ratio, net operating profit ratio, we use the formula net operating profit divided by net sales into 100. Second one of the profit ratio is known as net profit before tax to net sales ratio. Net profit before tax to net sales ratio indicates the relationship between the total profit of the organization before deduction of the tax to net sales. Therefore, for determination of this ratio, we can use the formula net profit before tax to net sales into 100. And third one of the profit ratio is to be known as net profit after tax to net sales ratio. This ratio indicates the net efficiency of the organization or relationship of net profit after tax to net sales. For determination of this ratio, we use the formula net profit after tax divided by net sales into 100. All the profit ratios are expressed in the form of percentage, and major purpose of this ratio is to indicate the net efficiency as well as operating efficiency, to measure the operating profitability and net profitability of the organization. If there is a proper control of management over the operating activities, then naturally the profit ratio should be higher. And in case of organization, either the standard profit ratios are not to be fixed, but higher ratios are always favorable towards the organization, which indicates that there should be a proper control over operating activities and business activities by the management. For understanding purpose, if we considered net sales are 15 lakhs, operating profit is rupees 1 lakhs, net profit before tax is 1,50,000, and net profit after tax is rupees 1,20,000, then the 3 profit ratios can be determined as under. Net operating profit to net sales ratio can be determined by applying the formula net operating profit divided by net sales into 100, Here net operating profit is 1 lakhs, net sales are 15 lakhs into 100. The ratio is 6.67%. Net profit before tax to net sales ratio can be determined by applying the formula net profit before tax divided by net sales into 100. As per given figure, the profit before tax is 1,50,000. Net sales are 15 lakhs into 100. The ratio is 10%. And the third profit ratio is known as net profit after tax to net sales ratio. This can be determined by applying the formula net profit after tax divided by net sales into 100. Net profit after tax is 1,20,000 divided by net sales rupees 15 lakhs into 100. The ratio is 8%. By this way, all the profit ratios can be determined. Here you have advised that while you calculate the profit ratios, then if it is particularly asked to determine the specific profit ratio, then you can determine only that particular profit ratio. Either it can be net operating profit ratio or profit before tax ratio or profit after tax ratio. But where no specific ratio is to be asked and only the information is indicated at to find out the profit ratios, then in this case you can determine as all the possible ratios. Generally the ratios may be uh, into three types or three categories: operating profit, net profit before tax, and net profit after tax. Only you remember that after determination of operating profit, if there were no non-operating income as well as non-operating expenses, then net operating profit and profit before tax is to be same. Similarly, if there is no tax paid off during the year or no any provision should be made against the tax, then the profit before tax and profit after tax is to be same. Only you can determine the different profit ratios where the figures are different or the profits are different as separate stages. Only remember that in case of determination of profit ratio, you may consider the particular profit, either it can be net operating profit, it can be profit before tax, or it can be profit after tax. The said profit is to be divided by the figure of net sales and it is to be multiplied by 100. Today we discuss the three profit ratios. There is one of the important revenue statement ratios which can be covered under the group of revenue statement. Such ratio can be discussed in detail in the next lecture. Today we stop here. Thank you.